Good morning, everyone. Once again, the euro didn't rally on better than expected news about the Eurozone economy, but the dollar did move higher on good news about the US. The rise in Eurozone manufacturing PMIs announced on Monday really failed to support Eurodollar at all, but the dollar generally moved higher against most major currencies on Tuesday after a surprising rise in the manufacturing ISM index. It had been expected to decline in August after July's relatively high reading, but instead it rose further. The index is being driven by extremely high readings for new orders and production. Strength in new orders is particularly encouraging because it's a leading indicator of future manufacturing, and that suggests that September ISM reading will be similarly strong. News that several senior Republicans backed President Obama in recommending military action in Syria dampened the bullish sentiment during the U.S. trading day, but nonetheless, rate forecasts from the Fed funds futures finished as much as 5 basis points higher. They're now back to the 5th of July peak. The only G10 currency to make a noticeable gain against the dollar was the Australian dollar, which continued the rally that started after Tuesday's RBA meeting. We're now recommending long Aussie trades, particularly versus the yen and the euro, as I mentioned yesterday morning. Looking at the Commitment of Traders report from the U.S. Commodities Futures Trading Commission, shows that short Aussie dollar positions by speculative participants are nearly the lowest they've been since 5 years. Or in other words, that the speculators are as short as they've been in 5 years. So we could see some position closing that would send the currency higher. Meanwhile, better risk sentiment should keep the yen on a depreciating trend. Or, looking again at positioning, we see from the COT report that long euro positions are at the high end of the range for the last 5 years. So closing out of these positions as Eurodollar starts to break out on the downside could weaken the euro. As for today's indicators, we have the final service sector PMIs for August for the Eurozone, but given that Monday's manufacturing indices barely made any impact on the market, I wouldn't expect these to have much effect either. Eurozone retail sales for July are expected to increase 0.2% month on month. This would be a turnaround from the 0.5% decline in June, and that would agree with the small rise in consumer confidence that we saw during the month. That could bolster the euro somewhat. In the U.S., the surprisingly narrow trade deficit of $34.2 billion in June is expected to have widened back to a more normal level in July. The forecasts are for $38.8 billion. Later in the day, the Fed releases the Beige Book. I look for some optimistic comments in that about the U.S. economy that I think will bolster the dollar further. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.